Wednesday, December 2nd, 2020, Maneco 64, home of alternative economics and contrarian views. So the dollar is our currency, but it's your problem. Well, that's not me saying that. That was Secretary of the Treasury John Connolly back in 1971. He said that to a G10 meeting in Rome prior to the US coming off the gold standard or the Bretton Woods system. He said that to a group of other Treasury officials or finance ministers or chancellors of the exchequer officials, and they were shocked. And of course, later on that year, on August 15th, 1971, President Nixon, he stopped the convertibility of the dollar or Federal Reserve notes into gold at $35 per ounce. And why am I saying that today? I've made quite a few videos in the past about the dollar index, the cycles, and I've even made up a little playlist yesterday, and it's called Dollar Index. And it's got 3 videos in there, even though I've made a lot more videos about the dollar and the dollar index. But these are important because they talk about the cycle, long-term cycle of the dollar index. And dollar index is breaking down right now. We're almost at 91. And you will see in those videos that there's like a 7 to 9 year cycle, up cycle, and then down cycle. So in total, from bottom to bottom, let's say the last big bottom was in 2008. It's about 16 years. So I expect the dollar to continue to trade lower versus the major currencies, especially the euro. Euro is looking very positive as well, even though the euro has been said to be on its deathbed for many years. Technically, it looks good. So by 2024 or thereabouts, I would expect a bottom in the dollar. And as I've said before, the way to hedge against dollar weakness is not going to be through other fiat currencies. It's going to be through precious metals, because the other fiat currencies are also sinking all together with the dollar. You noticed yesterday when precious metals rallied, I think gold was up 2%, silver at least 4%. The other currencies, the fiat currencies, actually didn't rally, so they also lost ground against precious metals. And that's going to be the way forward. And fundamentally as well, we saw something yesterday that I think just shows how DC, the political establishment, is working together. Doesn't matter who's going to be in the White House on January 20th. I know that if you read on the mainstream media or you listen to mainstream media and the news, the great expectation is a Biden administration, but I'm not convinced. But be as it may, it looks like even during this interim between administrations, they're ready to step up to the plate. So yesterday, there's a story here from the FT, and I'm aware that Powell and Mnuchin were testifying to the Senate. But it says U.S. senators announce $908 billion stimulus proposal. Offer rekindles hopes for deal as Fed Chairman Jay Powell appeals for more government support. So when you have the man who's supposed to safeguard the integrity of the currency, even though through the laws they've passed, he's also supposed to promote full employment and economic growth. But I would say one of the functions of the central bank is to maintain the integrity of the currency. But I think that's the last thing on their minds. These people wouldn't know a sound money system if it hit them on the face. So this is what the FT says. A bipartisan group of U.S. senators has proposed a $908 billion spending package to break the deadlock on fiscal stimulus, as Jay Powell, the chairman of the Federal Reserve, made a new appeal for lawmakers to provide more government support to the economy. The proposal, led by Mark Warner, the Virginia Democrat, and Susan Collins, the Maine Republican, reflects the growing anxiety in Washington over the state of the economy. Negotiations on a new stimulus package faltered before the November election and have not resumed. At a hearing before the Senate Banking Committee on Tuesday, Mr. Powell said the recovery had been faster than expected, but the labor market was still 10 million jobs below pre-pandemic levels. This is what he said. We can both acknowledge the process and also point out that just how far we have left to go. Lion's share of the credit really should go to fiscal policy. We will use our tools until the danger is well and truly past, and it may require help from other parts of government as well, including Congress, he added. Later in the hearing, Fed chairman said, we can see the end. We just need to make sure we get there. Well, I think the end is going to be a light at the end of the tunnel, but it's going to be an oncoming train. It's going to be a currency disaster, to be honest. And you can bet the other countries, major countries, are going to try to keep up. And that's why they're all going to fall versus precious metals, their currencies, that is. And this is opposite to the mantra that we started seeing under Robert Rubin, the Secretary of the Treasury under Clinton, who actually started out in the precious metals department at Goldman Sachs, called Jay Aaron. And there are a lot of articles on gata.org, GATA.org, that talk about the manipulation of gold, that it started in the 90s, during the Clinton administration, under the leadership of Robert Rubin, because they had this strong dollar policy that they always talked about. And one way to maintain a strong dollar was to keep the price of gold depressed, which they did quite well in the 90s up until the early 2000s. So I also recommend for some of you who might not know how they manipulate the price of gold, that you watch some of my videos on a playlist entitled Precious Metals Manipulation. So yeah, you go to my playlist, you find the dollar index playlist, you find the precious metals manipulation playlist. I've made like 9 videos about that over the years, and you can pick and choose, and you can listen to those videos where I go over that. So yes, I think they're not going to come out, of course, and say what maybe John Connolly said. John Connolly, by the way, was also riding with President Kennedy in Dallas in that Lincoln limousine, presidential limousine. And he was, of course, caught by the magic bullet. He survived, of course, and went on to become Secretary of the Treasury under Richard Nixon. I think for about a year or two, he was Secretary of the Treasury, John Connolly. So, yeah, they're not going to come out and say what John Connolly said, but implicitly, that's what the policy is, I think. And the only way, of course, to protect against this, because when the currencies are like debased, like they're planning to do, not only in the U.S., but U.S. will be the leader of that. You get loss of purchasing power, which basically is inflation. Yes, they keep telling us we don't have any inflation, but just tell me whether your grocery bills, tuition, healthcare has gone down. These costs have gone down in the last 5, 10, 15, 20 years. Yeah, to all those deflation people out there, I think what they mean by deflation is a slowdown in the economy, not the monetary kind of deflation, because that actually causes the currency to rise. So, of course, we know that one of the ways to protect yourself against this currency debasement, against the inflation that's going to continue, is through owning gold and silver, precious metals. Some of you, of course, are into Bitcoin. I would say that's not a bad alternative, but it's very speculative. So be careful how much you commit, how much of your savings you commit to Bitcoin and other cryptos. So with that, let's look at where the markets are this morning. I'm a little early this morning. It's 7:20 a.m. London. We've seen a little bit of a pullback in the precious metals, especially silver. Not unusual to see that, of course, after a big rally. We've got spot gold at 1812. That's down just over $2. Range has been 1807 to 1817. Silver is down about 1% or 25 cents at 23.74. Range has been 24.04 to 23.53. Dow future down 0.25%. S&P down 1/8. The Nasdaq 100 futures also down 1/8%. So the stock markets are a little lower. They've been lower than where they are right now overnight. The FTSE is down 0.25% as well. That's the UK FTSE 100 index. Sterling is unchanged, 134.17. The euro still very firm at 120.74. That's unchanged. Dollar's up a little bit versus the yen at 104.50, unchanged against the yuan. WTI crude is down 0.5% at 44.37. We saw yesterday the bond yield, or the 10-year yield, actually 10-year note yield, rise quite significantly. It rose about 10 basis points, which is a big move. Right now it's down 1 basis point at 0.92. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Parler, and all these other platforms below here. I wish you all a great day. Take care. Bye.